Good evening and welcome to this session by Calamos Investments. Today we have with us our Dean, Leah Bagman. We also have Holland Brems from Calamos Investments, Shaheen Iqbal, Senior Vice President, Head of Quantitative Investments. We have Valia Sukopolo, I hope I'm not, Junior Quant Analyst, and Shrey Raheja from Calamos Investments. Let's give them all a big hand clap. We appreciate time to be here with us. We have put up an audio video recording notice, so the session is being recorded. I would like to first start off by giving small gifts or mementos to our guests, and I request Leah to come and do the honors. Holland.
Thank you very much.
Valia and Trey. Awesome. Before we start off, I would like to see if Riyadh would like to say a few words.
So, as you all know, we have a very special relationship with Calamos Investments. The founder of Calamos Investments, John Calamos, is our own graduate. He did his undergraduate and MBA at Stewart. He was also a Vietnam War vet and flew warplanes in the war. And he also used to work at the grocery store for a while. He's a wonderful person and an amazing success story, and we're extremely proud of him and his accomplishments and of Calamos Investment. And as part of this special relationship, we've had a number of students who took internships at Calamos over the years and received full-time appointments as a result, after showing them their stellar performance, a stored grit and tenacity and hard work. So we're looking forward to continuing that relationship in the years to come. And in case you weren't aware, Calamos Investments also supports our students in attending competitions and conferences around the world. So the relationship is really important to all of us. It helps train our students, it helps bring opportunities to the school, and it helps students with internships and jobs, and it helps Calamos Investments with excellent talent from you all. So I really appreciate that we can do this in person once more. It's super exciting. And we also have Professor Ricky Cooper here, who can say a couple of words about the finance program and how we can grow it to bring more students to Calamos.
Yeah, I wasn't expecting to say that.
Well, I will say, so for those of you in my class and you wonder like if they actually do all that stuff in the real world, today you're going to see a firm that actually does all this stuff in the real world. So our class is actually, we start out learning like factors, signal to noise ratios, testing them quantitatively, portfolio construction, analytics, attribution, how to update a model. And I think most of the time people sit there and think, who actually does all this stuff in the real world? Calamos is one of the best firms at this. They really are a very good firm at doing this. And they've been very kind to our students. So if you're sitting here thinking about where I could have a career, this is the place you should really listen to.
Yeah. Thank you, Riyadh and Ricky. I would like to start off by introducing the speakers for today. Holland Brems is the PHR Manager and Talent Acquisition. She joined Calamos in July of 2016 and leads all recruiting efforts for the firm. Ms. Brems received her undergrad degree from DePaul University in Chicago, Illinois, and obtained a professional in human resources certification in 2015. Let's give her a warm welcome once again. Shaheen Iqbal, Senior Vice President, Head of Quantitative Investments and Co-Head of Risk, joined Calamos in 2017 and has 21 years of investment industry experience. Shaheen is responsible for oversight of quantitative investment and risk management teams. Prior to joining the firm, Shaheen was Executive Director and Senior Quantitative Analyst in the Applied Research Group of UBS Asset Management. Shaheen earned an MBA from the University of Chicago Booth School of Business with concentrations in analytical finance and economics. He received a bachelor's with concentrations in math and chemistry from Ranchi University, and an honors diploma in software from the National Institute of Information Technology in India. He is a member of the CFA Institute, the CFA Society of Chicago, and the Chicago Quantitative Alliance. Let's give him a big hand once again.
Hello again. Good evening. I'm Holland Bruns, like we talked about. I run all of the recruiting efforts and part of the HR department at Calamos. So it's my pleasure to really bring folks into the firm and really introduce all of you to the opportunities that we might offer. I think I have the easiest part of today because I get to tell you guys why you should work at Calamos and why our culture is great and why our opportunities are great. And then Shaheen is going to dive into a little bit more about his team, what they do. I'll speak a little bit about also our internship program and some of the other openings that we might have that might be interesting to you guys. So with that, I'll go ahead and kick us off with just an overview of Calamos and a little bit about our background and history. So here you will see our Naperville headquartered office. We are based out in Naperville. We have a couple Chicagoland office locations that you guys probably know about. Naperville is where the majority of our workforce is located. We have about 350 people total at Calamos. That is nationwide. Like I said, the majority of our workforce is in Naperville, but we did just open a Chicago office in the Fulton Market area. That'll seat about 100 when it's at full capacity, which is great. It's a great recruiting tool for me, but it's also great for a lot of investment professionals that are not interested in doing the reverse commute or might want to stay closer to the city. So that is just a fantastic secondary office location that we do have. And then here you'll just see kind of an overview of our firm. You can see that we have just under 40 billion under management, 11 of which is in convertibles. So you'll probably know that John Calamos did write several books about convertible securities. That's really what our firm is known for in the industry. And you'll see that we have a variety of different products and strategies that we offer to our clients. So we have 20 open-end funds, we have 7 closed-end funds, 2 UCITS, and then a couple institutional separately managed accounts as well. But like I already mentioned, we have about 350 employees total. That really makes us a boutique asset manager. We like that size because it allows us to provide a level of service to clients that you might not get with some of our competitors. Very important for us to maintain that sterling reputation, not just locally, but nationwide as well. You'll also see that in addition to our Chicago 2 offices, we have an office in New York and also in Miami, just outside of Miami in Coral Gables. These are kind of extensions of our wealth management department. Less than 10 people in both of those offices, but we do have that run by head of our wealth management. His name is Joe Nader. And then we have small teams in San Francisco, Milwaukee, Portland. These are teams that we've either acquired, but it does give us that national presence as well, which is fantastic. You'll see the breakdown of the different vehicles and the different strategies that we do have here. And at the bottom of the slide, you'll see kind of the history of Calamos. It was founded by John Calamos Sr., of course, in the late 70s. Through the 80s and 90s, you can see that we did acquire a number of different funds or launched a different funds. And we did have John write a couple different books about convertible securities as well. And then if you get kind of closer to the present time, you'll see that we have continued that just progression of growth and advancement. So we've launched new funds, we've acquired new funds, we have gone into the ESG space recently, which is very, very interesting and very exciting for us. We've acquired a Timpani team, we've acquired a Pearl team, and then most recently, you can see towards the end here, in 2016, we brought on John Kadunis, who is our CEO. Him and John Sr. are pretty much lockstep. They work very closely with one another. Since John Kadunis has joined us, we have continued to see our AUM tick up. So it's a very exciting time to be part of Calamos, and also different teams that have seen some additional headcount growth as well. This is our senior management team. Oops. Come back. Come back. Come back. There we go. Senior management team, thank you. You should recognize the gentleman on the top, John Calamos Sr., and then John Kadunis, our CEO. Underneath that, we have our department heads. Bob Behan runs our sales team, our distribution team. Tom Herman is our CFO. Dan Dufresne is our Chief Operating Officer. He's also a little bit newer to us. He runs all things operations, IT, marketing. Chris Jackson is our General Counsel. Bill Takahashi, who is the department head that I'm under, is our head of human resources. And then Joe Nader is our head of wealth management. The majority of these gentlemen do operate out of that either Naperville or that Chicago office location. Joe Nader sits in Florida with the wealth management team. And then below that, you'll see our different CIOs and the different strategies that they do run. John Hillenbrand, Nick Nizelak, Eli Pars, Matt Perrines, and then Michael Grant. Again, most of these gentlemen report out of Chicago, Michael Grant being the exception, and he is out of the San Francisco office. There we go. Another just breakdown of the senior leadership team. One call out that I want to make on this slide is a addition to our marketing group, our chief marketing officer, who is Jessica Fernandez, who just joined us about a month ago. She came from New York, and she actually is going to be leading some new marketing efforts for us, which again, very exciting time to be part of Calamos because we have gone through some significant growth with not only AUM, but different teams that we've acquired. I think it's important that we market ourselves in the industry, in the market, and we're very deliberate about the message that we send. So Jessica's going to help us with that. Speaking of marketing, if you guys are Bulls fans, you'll probably see Calamos on the floor. We are sponsors of the Chicago Bulls, so you'll see our logo there. This has been extremely helpful, again, for recruiting in my world, because a lot of people see our logo, they identify with us, they look us up, and they see the kind of job opportunities that we do have. So it's a very exciting time for marketing to be part of those Chicago Bulls partnership. And then again, just kind of speaking about why Calamos is so great. We are that smaller size, which again, from an HR perspective, allows us to have a lot more control over culture within the firm. So we value our employees, we value our staff, and we want to make sure that everybody feels like they have a career path, like they feel like they have a home, and they feel like they are being challenged in the work that they do. So like I said, we're client driven, we're committed to excellence and exceeding all of client expectations and needs. We operate with trust and integrity and treat each other with care and mutual respect. We are committed to excellence, focusing on superior execution and continuous improvement. And we always think and act like owners, and we continually enhance value for our stakeholders, associates, and clients. And then we communicate openly and honestly, providing ongoing constructive feedback. I know that I personally take part of that with doing things like new hire check-ins. I do several of those a week, making sure that we are always improving processes from the recruiting step 1 stage to orientation, and then 2 to 3 months in to make sure everybody has all the tools and resources necessary to do their job as well, as quickly as possible, so they can be as successful as possible. And then the 5 keys to success that we always operate under, always striving for, of course, outstanding investment performance. We have a comprehensive product breadth, which you guys have already heard about. Very strong brand image. You'll see that continue to be very present with Jessica's leadership in the marketing team. And then so superior distribution through key alliances and excellent client services. So again, just 5 different keys of success that we work under. Some of the great things about Calamos and just the community outreach that we do, we have something called the Citizen Calamos Committee, where we have a group of folks that always are trying to strive to really reach out to the community that we're a part of, whether it be out in Naperville, Chicago, or again, nationwide. We feel that it's very important to have a presence in the community that we operate under. So there is not only brand recognition, but we feel connected to the communities that we're involved with. Veterans Day, as mentioned, John Sr. is a veteran, so we take this very seriously. We always like to honor veterans. On Veterans Day, which is actually coming up, we typically do a board in our lobby. We have a video posted on our intranet, and we always honor those that have served with us. So we acknowledge their commitment to the country and also to the company. We do things like blood donations. We have health fitness apps. We do a lot of outreach with our benefits programs as well to make sure that people feel supported with the benefits that they do have with Calamos. And we have Take Our Sons and Daughters to Work Day as well. This is another great opportunity for associates to feel connected to the different workers that are present at Calamos. They can bring their sons and daughters, show them around, show them what they do every day. So there's more of a connection there. And then we also do food bank volunteer events, Toys for Tots around the holidays, and then we have a summer internship program. As far as the summer internship program goes, it's typically a 10 to 12 week program. We typically look for rising juniors and seniors for the openings that we do have. Last year, we had 24 interns across 15 departments. So a lot of different departments do accept interns, everything from marketing to quantitative finance to sales. HR always gets an intern as well, but it's always a good opportunity for people to get real world life experience. It's not something where you're stapling, you're not making copies, you are part of team projects, you're really doing real life world experience, because we want to make sure you get the most out of that internship and you're not just feeling like you're doing busy work. So a lot of the times we have an end of internship presentation that you have the opportunity to present on the real world projects that you have done in front of not only your peers, but also others at the firm. And then some of the current openings that we do have, from a recruiting standpoint, we post all of our openings on our website, so you guys can feel free to peruse our website under the career opportunities for our openings. We are starting to recruit for our internship program for next summer, actually starting next week. We are attending the IIT Career Fair. Show of hands, is anybody going next Wednesday? Excellent. So we do have a table there, please stop by, but we will be starting to recruit for that summer internship program. Like I said, a variety of departments will accept interns, everything from data science, IT, quant, marketing, sales, even like I said, the HR team does get an intern as well. So a lot of opportunities to join Calamos. We always like to say that it's not a guarantee for there to be, a full-time position moving forward, but we always are looking for top talent. First place that we always look when we have an entry-level position is our previous interns. So it's a great way to get some relationships built, network, and also get a foot in the door. And with that, I will pass it off to Shaheen, and he's going to talk about the work that he does and the team that he leads.
Thank you.
Hey guys, may the which button do I press? Oh, there you go. All right, so before I talk about quant and risk and what we guys do on a day-to-day basis, I thought it would be a good idea to start with what kind of projects we are supporting. So as you can see on the list here, we have strategies and capabilities across different asset classes. So we have equities portfolios, we have fixed income, we have convertible, as Holland mentioned. We have a combination of these products as well as options. You will also see that our strategy spans across different geographical areas. So we not only manage US product, but we have international product as well. And also, if you think in terms of vol regime, we have low vol product, we have long short portfolio, we have market neutral. So to summarize this slide, I would say that we have a breadth of strategies that we offer at Calamos to our clients. And why this is important is in the context of quant and risk is because as a quant and risk team being the central resource in the organization, we are responsible to help all these different investment teams with their quantitative and risk needs. Just talking about organization, focusing specifically on investment organization. So here, as you can see, we have aligned ourselves on investment teams. So we have at Calamos, we have a team of teams approach. So we have a team for US growth equities, sustainable equities, global equities, etc. And what we do is, so these equity investment teams are responsible for running their individual portfolios, but at the same time, they also come together as part of the multi-asset team to put together a product that requires a combination of, let's say, fixed income or equity, or convert an option. And you will see a lot of that in our product offering. For example, we have a market neutral product where we have a combination of convert arb with hedged equity with a merger arb strategy. And all of these things come together and constructed in an efficient way to create a market neutral portfolio. Now, if you think about convert arb, we are talking about convertible securities and stock. If you think about hedged equity, we are talking about a portfolio of stocks combined with options overlay on both sides. If you think about merger arb equity, that's a totally different animal where we are, trying to arb the target and the acquirer. So again, these individual teams are responsible for their product, but then they come together to when we are talking about any multi-strat product. On the right side, you see global trading, portfolio specialist, portfolio risk management. I would say that is portfolio risk as well as quant and investment operations. So these are the teams that are supporting all the investment teams. At the bottom of this slide, you will see we have a total of 80 investment professionals, and that includes 7 risk management and quant professionals. Now let's talk about quant and the reason why I showed the first 2 slides. So quant investment team is responsible for providing quantitative support to all of Calamos investment team. Now what that means for us, we are a team of 7 professionals. We have to be nimble, we have to be adaptive, we have to be flexible, and oftentimes we kind of move from one thing to the other. And in order for us to achieve that, we need to have, the very first thing that we need to have on the quant side is to have a robust IT infrastructure. And that comes with by partnering with our IT colleagues. So we have a dedicated IT team, we have a dedicated market data services team. And what happens is, let's say, for example, if we needed a new data set, we as a quant, we don't want to go and spend our time loading that data. So that's where we partner with IT. They'll go and load data for us and give us in a format that we can directly consume, and then we can start doing our research. So that's one example of a partnership where quant and quant and IT, we partner with each other. I'll give you an example here. So for example, last year, we acquired iVolatility database. It's a database of all the options data going back 20, 30 years, okay? Now, if you look at the size of that database, that's about 3 billion rows. I don't think I can bring that data in Python. My Python will crash. So what we did was we worked with our IT department, who internally took our data into a cloud environment and used multi-processing technology. And we gave them that, okay, here is all the 3 billion rows, but we are not interested in looking at those data. We want to create factors out of that data. And here are 130 different factors that we want to create. They went, they ran their process, worked with us, and at the end, for each stock, each day, we are getting 130 factors. Now, we shrunk the size from $3 billion to a few million rows. And now we are working out of that, developing strategies and supporting other teams. So again, going back, infrastructure is very important. And this is not only true from the IT side, it is also true on the quant side. So whenever we are writing a piece of code, we're also thinking about scalability. Can we use that code somewhere else? And our goal over time is to grow this library of code base. So when the next project comes, because there's so much overlap between what we do today versus what we'll be doing in 6 months, let's reuse those rather than creating and reinventing the wheel. So building repeatable, scalable code library is very important. We also created a database of all the factors. I just mentioned about options data, but even on the fundamental data, why do we need each one of us have to go and create a PE factor or price to book or whatever, right? I mean, this is something that should be readily available to us when we need it. So what we have done is we spent time upfront, worked with IT, spent our time, created something that we all can use. Same thing, any alternative data set that we acquire, that's our goal, is to create a central library, and then not only do that, but also create a platform through which we can access data. So when we talk to IT, we say, hey, I don't care where the data sits. All we need to know is this is how we want to consume data for our quant research process. Give us data in this format. And at that point, we have no idea how the data is coming, how it is stored. We are just consuming and making doing the value added stuff on data, basically turning data into some meaningful information, whether it comes in terms of any kind of, quant research or building new product or enhancing existing product. Last data point on that, or point on that is process of maintaining data integrity. Even though I put that last, but that is probably should go first. The most important thing is to, and oftentimes a lot of people don't pay enough attention to, is the integrity of the data. As quant, we are working with millions of data sets on a given day. How do we make sure that the data that we are getting is correct, or reasonably correct, I should say? Okay. So over time, as we are working with data set, we are putting a lot of checks in place. We're working with IT partners, making sure they are checking data thoroughly. So when it comes to us, we are working with good quality data. So that's the first step. Once we have this infrastructure and all the data is available, that's where the fun part starts, which is quantitative modeling. What I mean by quantitative modeling, it can be many things. We could be talking about building a stock selection model, right? I'm sure many of you must have learned that already, building a value signal, growth signal, etc. Right? You can do that now with the factor library with writing 10, 15, 20 lines of code. Can we do something more innovative? Can we do machine learning? So we have done a number of things on that front. Where Shrey here is sitting here, has made an enormous contribution to the machine learning side. Microeconomic model. A lot of time we are doing multi-asset portfolio, right? Where the first decision that we have to make is how do we allocate between equities and fixed income? Equities, convertible fixed income. In order to do that, you need to have some view of where the world is going, where growth is going, where inflation is going, where the Fed is tightening, easing, as we all know what happened today with 75 basis point raise, right? So we have built macroeconomic model. A lot of time our PMs will come to us and say, hey, this is what we think that is going to happen. Can you recommend or can you come up with a list of a stock that falls into that category? It can be as simple as, there was a war going on between Russia and Ukraine. I want to know all companies that have significant exposure to Russia or Ukraine. There you go. But I'm also looking along with that, give me something that those stocks that are cheap, higher quality, whatever the criteria is. We can put together screening. A lot of time we come up with our own screens and look at existing portfolio and say, hey, these are the names that you own, where the quant model is saying that based on the quant model, it's not a good pick. Or these are the names that you don't own, where you think you should be looking at. So again, making those suggestions to the fundamental manager adds a lot of value. On the vol side, we do spend a lot of time on the option side. We build volatility regime. We are spending some time on ESG factor now that we have an ESG dedicated team at Calamos. And in many of our strategy, we incorporate ESG in our investment process. So again, we are doing a lot of work there. In terms of new product development, that is a continuation of the quant research work we do. So a lot of time when, let's say you're building a stock selection model that is telling you what stocks to buy and what stocks to avoid, right? Right now what we're doing is we're giving that to a fundamental manager where we have fundamental analysts and they're looking at it and they're combining the information. But if the quant model is good enough, why can't you run a quant money using that? So again, over time, we have put together two strategies. One we are again trading with house money, and the other one could be a sleeve in a portfolio. So that is a third dimension of the quant team. And the last is risk management and portfolio construction. So I have a slide on risk management, but portfolio construction is another place where quant can add value. So a lot of time when you think about talk to a fundamental manager, it's mostly bottom up. And I'm specifically focusing on equities. They're selecting a bunch of stock, they're putting together, they come up with a weight which is very ad hoc in nature. One can come and say, okay, here is an optimization tool, and I can use that to build you a better risk-adjusted return portfolio, an optimized portfolio. And we do a lot of that in our process, mostly done by the risk team. On the risk management side, again, there are two aspects of risk management. One is boring and the other one is interesting. So let me start with the boring. Boring is more your regular stuff. So what we do first is whenever there is a new product, we work with the PM to agree on a format in which we should be looking at risk for that portfolio. So we are a partner with them. We are not a policeman. So we say, okay, here's your equity portfolio. This is how risk department think we should be looking at risk. What do you think? And then we come together and agree on a format. And then that becomes a repeatable process. And we meet with them once a month. We send reports to them on weekly, monthly basis. So that's more of a repeatable process. The interesting part or ad hoc part is dictated by market. So for example, when COVID hit back in 2020, all of a sudden we were looking at risk from sector, whether we are overweight or underweight energy or technology or other sectors. We moved from, of course, we kept looking at that, but then we also started looking at which of these companies are COVID beneficiaries versus, stay at home versus go outside, right? That narrative changed, once we started to reopen. So reopening, stay at home, then inflation came, right? Then we started looking at which companies have pricing power. Now we are talking about, in the last 2 months, we have been talking about, hey, inflation on the good side is coming down. It's the services inflation that is going up. So now we are looking at how our portfolio is exposed to goods versus services. So again, that part is constantly evolving. And we always like to look at our portfolio using a same lens first, because we want to see the continuity and how that has changed over time. But at the same time, we do want to look at our risk using these new dimension as market dynamic changes. Once we have this risk, we communicate, we sit down with portfolio manager, and our goal there is to show them not only the intended risk, but unintended risk, and whether they're getting paid for taking those risks. Because when you take risk, you have conviction. That's why you take risk, and you should get paid for it. So that's our goal, is to show them what their portfolio is exposed to, and whether they're getting paid for taking those risks. We also take individual portfolios and run a lot of stress testing in terms of how the portfolio will perform under different market scenarios. And we look at liquidity analysis, especially like in a market environment like March of 2020, we were on the top of all our portfolios looking at liquidity needs, because what if we have to, there is a redemption and we have to liquidate, will we be able to liquidate? So we always do those kind of stress testing during normal time and during times of crisis. And then we give a periodic update to all the PMs. So that's at individual portfolio level. Then what we do is we take those individual portfolio and we combine that at the firm level, because you may have one PM who's overweight a particular stock and the other PM who's underweight that stock because of their view on that security. So aggregating that at firm level gives us a firm view of risk, and that gets communicated to the C-suite, which is John Calamos and John Kudonis, and they look at it on a daily basis. Oh, sorry, not daily, but periodic basis. Not only that, we also look at value at risk as one of the metrics. There are a lot of stress tests at the firm level. So that's the firm-wide risk. And the last part of the risk management is we get involved early on in any kind of new product development or any kind of strategic initiative that the firm is taking. And I think Holland mentioned two in the last couple of years. So we acquired HER, which was an ESG shop and is part of Calamos now, and T3, which was a small cap shop. So before we get into any kind of M&A transaction, we come in, we look at their portfolio, we analyze, dissect, etc., and we give our feedback to the M&A team, and then they proceed from there. If we are building any new product, which we are currently doing, we get involved early on to see, okay, if we build this product, how are we going to manage the risk of this product? Because risk is forefront of anything and everything we do at Calamos. So and then any kind of due diligence that comes, this team gets involved on a periodic basis. And that's what I have. And I would love to get your questions. That's why I wanted to keep my presentation short, because I do want to spend time on answering your question. Sure.
Let's see your strategies.
Okay. It depends on which strategy you're talking about. Mostly we are longer term. But then if you're looking at our US growth strategy, we tend to be longer term. Our thinking small cap team is a little bit, faster moving. But if you look at our market neutral, where we are doing options, there it's much more dynamic. And again, there is a reason for that, because we have to hedge. And for hedging, you have to adjust your delta on a daily basis, right? So there it is more dynamic. So we have a mix again. To answer your question, we have longer term and medium term. We don't have any high frequency or short term.
What specific tools are being used in your department?
Sorry, say again.
What specific tools are you using in your department? For instance,
Tools, okay. So on the quant side, we use Python primarily for coding. We of course have, for machine learning, we use cloud. On the risk side, we use Bloomberg, of course. We use on the risk side, we use Barra quite a lot. We use Barra risk model. We use Bloomberg risk model. What else do we use? We use all the benchmark provider, MSCI, S&P, right? Yeah, so we use a number of. We use Microbond for any kind of economic data. So we have different data providers, but at the end, when the data comes and takes shape inside Calamos, at that point, it's us working, using Python primarily.
Primary interaction tool is Python, like integrating data and like building strategies would generally be through Python. We are fairly nimble. If something requires like a different programming software, we can do that. But Python, not just for us, like for most quantitative finance shops, I think Python is what they're using, unless it's like very, very high frequency, which we are not.
Yeah. And the other thing is, there are times when we build something and then we think that it is a repeatable process. We don't want to be in the business of running things. We want to move on to the next thing. So at that point, we give it to IT. They productionize it. They are making sure that it runs every night. If it fails, then they take care of it, etc.
Okay, so you actually mentioned the ESG that Calamos are actually going into ESG. So I'm really curious to know the kind of reporting framework that Calamos have been using.
So what kind of framework to do ESG analysis? Okay, so we acquired an ESG team, and they were doing ESG since late 90s. Basically, when ESG was not even a word. So if you go back 10, 12 years, it used to be called SRI, socially responsible investment. Then it was relabeled as ESG. And these guys were doing even prior to that. So they have came up with their own proprietary set of rules. And they're more focused, in our case, they're more focused on the environmental side. So they have 7 different KPIs that they came up with. And what we do is we look at each company and we rate them on those 7 KPIs. And within those KPIs, there are many, sub items. But together we look at 27 or 28 different KPIs. And then we score companies on each one of them. And that's how we come up with our own proprietary ESG score. And again, ESG is one part, and then the investment valuation and all your traditional factors that you look at the other side. So those are combined together to create a portfolio.
how you apply machine learning in your strategies?
How are you applying machine learning in your strategy?
Machine learning in general is like a systematic selection tool, and quant is all about systematically selecting things, right? And not like biasing things in a way or having like a priori opinion about things. So machine learning as a tool is useful to kind of, I'm not putting it the way we do it, but in general, like what many people do is just throw everything at the machine and just get like get something out of it. I mean, if you have no idea about anything in the world, then maybe that's a good way of doing things. But generally, like we applied it in stock selection. It's very, very nuanced because I mean, when you're trying to predict like what is the next movie I should watch on Netflix or something, that's like a cross-sectional problem. I won't say easy, but at least it's more deterministic, relatively more deterministic. Finance is all about predicting the future, which is like very, very noisy. So like the signal to noise ratio is very, very high there. So the concepts are very nuanced. You actually need to think about like what you are doing by, like ask all the high level questions. Like before I joined, we had like a training window of 1 year. Then I thought about it, is this consistent with how we want to do things, or should we also have like a longer term window, like a 5-year window to train a machine learning model? So it's very, very nuanced, which makes it more exciting because it's not about just throwing things at it and then it'll work kind of thing. If it was that easy, then like everybody will make money using that. So that's not how it works. But then, so you have to be good at both things, right? I mean, making money at this age and hour is not very easy. So you have to be good at like all your statistics and machine learning, but your concepts also need to be there. You have to also have like a sense of what you are throwing at the machine, what features you are giving there. And then once everything is done, you also need to match it to your intuition. If machine is telling you something that's intuitively not right, even if it's making money, it's most likely that there's some programming issue or something that you're doing wrong. So you need to be like very, very aware about what you're doing, why you're doing, and before and after your analysis, you need to be like think a lot about these things because it's very, very nuanced the way these things work.
The way we think about in machine learning is I've been in this business for over 20 years now, and I'm an old school, so still believe in what I talked about. So to me, that's my benchmark. Okay, if I'm using machine learning, I'm just complicating stuff, right? It's hard to explain. And so what we do is, or what we did initially when we started on this journey, we said, okay, here is my multi-factor model that we think we can come up with based on our intuition. This is how much it returns. Here's a machine learning model. Again, we are using our economic intuition and we are building this. Is it outperforming? Does it outperform our traditional model? And if it does, by how much? So at what cost we are adding those complications? And it is one of the tool in our toolbox. It is not the tool in the toolbox. I mean, we are using machine learning on the wall side right now, and Shay and I, we debate almost every day. Okay, what is our term structure model saying? What is our machine learning model saying? Okay, do they agree with each other? Do they disagree? What do we think? Because we are looking at the market. So again, you bring all of that together to form your opinion. We like to be systematic. We like to be data driven. That's as a quant, we don't want to use our judgment. If we have a judgment, we might want to incorporate that in the model and not use it on a daily basis. But there are times when you have to look at this. And there are times when the outcome is binary. Going into 1 o'clock FOMC meeting, you didn't know, I mean, of course the consensus was 75 basis points, but could be 1% or could be 50 basis points. We looked at our model at 12:30 and then we reviewed our model at 1:15 to see what our model is saying. So again, it's one of the tools. Don't throw everything at machine learning and hope that something will stick. You have to have an economic intuition. And then
It's not to say that machine learning doesn't work. It's more to say that you have to put twice the effort to make it work, because you have to not like twice the effort as you would have to put in a multi-factor model. I'm saying like you have to put in extra effort to make it intuitive. Like we also do like post analysis, something like sharp analysis. I don't know if any of you heard of that, but that is done to kind of see what exactly the machine is investing on. So you need to put that extra effort to see like exactly what the machine is doing, because I mean, at the end of the day, these algorithms aren't like linear algorithms. They are like very, very sophisticated. So you need to put that extra effort so that you understand exactly what you're doing. If you are like, if you want to be lazy about it, you'll probably be better off using like a linear approach rather than using machine learning. But if you're using machine learning, then you have to do it right. You have to do it the right way. So that takes like a lot of, like, it's not like you, because XGBoost as it is available as a package. You can just use it and it's easy to do, but that won't work.
That's the answer I'm looking for. Yes, okay.
Shishine, I think you have a message in the chat.
how do I see that? Thanks, Valia. Oh yeah, there you go. I think this may be a message for you, Alan. What are the skills you focus on while hiring graduates for quant? Okay, that's probably for me. For both interns as well as full-time role. Good question. So what kind of skills I'm looking for? So I'm looking for somebody with a strong mathematical background. To me, that is important. I think programming at this day and age is important. I think you can't be a quant without writing programs. So anybody who knows Python or MATLAB or any other packages like that, I mean, learning, if you know one, learning the other is very easy. And then, so those are the two main skills. And then, so when I say math, I'm focusing more on math and stats, basically to be very specific. So math and stats with programming experience, knowledge of programming. And then if you are, depending on whether it is a junior quant position or a quant analyst, for junior quant, of course, we don't expect you to know much. I like to quiz on intuition. As I said, we were just talking about machine learning. Don't throw everything at the machine and hope that something will stick and you'll get a model, but why you are doing it. So why to me is very important. I also want to know that, given all the tools that you have in your toolkit, which tool you would apply to solve what problem. So I do ask a lot of questions on that front. So those are some of the skills that I'm looking at.
General problem solving skills always help.
And attention to detail. Attention to detail is very important. In quant, when you're working with large set of data, it's easy to mess up. We do it. I have done it. So it's very important for us to be extremely careful when we are working with data, especially once we think that we are ready to present. It's even more important to look at that.
Especially if something is looking very good.
Yeah.
If your strategy is looking very, very good, then
Something wrong with your strategy.
check twice, thrice, 4 or 5 times.
So, as an international student, we are looking at a position that actually sponsor. So, we'd like to know if you sponsor for HB1.
Yes, so we do sponsor at Calamos. So we have a variety of associates that are under, various stages in their, work authorization status. So we have, F1 students, we have H1B students that just require transfers. We also have folks that are as part of their green process or green card process as well. So the short answer to the question is yes, we do sponsor. So case by case, of course, those are the types of questions that I would ask you when we do initial phone screen. I would just ask you a series of questions of, what stage you are. There's a timeline associated with it when you graduate, of course, because we need to probably transfer at some point, but case by case, but yes, we do.
Both Valia and me are actually on an H1B visa.
I'm on a J1 right now, but I got my H1B both good on our first try. I think.
Yeah,
So Calamos is also like a child on this. H1B, so.
Good question. Any other HR questions for me?
All right.
Do you have anything else?
No, I think, there you go.
So you're talking on building strategies. I would want to ask you, are these strategies decided by the PMs or are they tailor-made by the company and provided to the PMs?
Okay, so there are two parts to that. So when I say strategy, so there were two strategies in particular that we came, actually one and one. So the first one, we were thinking of launching a product. And a part of that product should be a sleeve that should have high distribution. So product came to us and said, hey, this is what we want to achieve through a product. Our competitors are doing this. We want something differentiated. So that's how it started. We went to drawing board. We looked at what we can do. And then eventually we did our research and that turned into a product. The second one was something that, we were working on a project in that, and we, as part of our work, we need a lot of research paper. And then, we don't try to replicate research paper because if it makes money, why would somebody write it, right? But you get a lot of ideas from reading those research papers. And then we got one idea and we turned that, it took us over 6 months, 7 months and to put together and to believe in that, number one, because as Shreya said, if something looks really good, you have to question it many times, right? Is it something that, book ahead bias in our model? What are we doing wrong? Because it's not easy to make money, right? So that was the second product that I talked about, where I think we once we were satisfied, we presented as a product, and now we're gonna, carve out a sleeve in another product that we will invest.
Like, I know that you won't be predicting stocks for tomorrow or day after tomorrow. You'll be predicting for a long term.
Right.
Next year, like 2 years from now. So the world is uncertain. And how are you coping up with constraints, the conditions?
Right. So on the quant side, I don't think we do 2 years. On quant side, most of our rebalancing frequency is monthly. Okay. But on the fundamental guys, they do pick stocks for 18 months into the future. And what they do is, so they have certain milestones that they think about. Okay, here's where stock is trading today. They do their DCF analysis and competitor analysis and so on and so forth. And they have a few milestones. They think the company is going to do A, B, C, D, and E, right? And through the life of their investment, they track to see if their hypothesis or the milestone is met by what company is subsequently doing. And then, depending on the outcome, we adjust our position up or down. But on the quant side, I don't think we do monthly.
Really, it's very hard for quant. Like, I don't think too many features will work that way. The bigger issue would be like, you are trying to backtest this, like how many data points would you end up having, like 5 or 10 or 15? That won't really be statistically significant.
So quant is all about data, right? I mean, if you want to do a real backtest, you need good amount of data. Do that.
Any other questions?
Include crypto here. That's not me. I mean, we are focusing. I mean, as you can see when I showed you the product, we don't have a crypto fund, so I have not spent any time on crypto. I can't say anything.
So I want to ask about your recruitment process.
Yeah. Just the process overall?
Yeah.
Yeah, so depending on what role you're applying for, like I said, we're going to start recruiting for our internship program starting next week. Typically, we post all of our positions online for full-time. We will start to post our internship positions over the next couple of weeks, and we'll start to gear up for collecting resumes. We meet with hiring managers, determine the ideal candidate profile for any opening. Typically, we also do a phone screen to start, but we also utilize something called Spark Hire. Show of hands, if anybody's done a one-way video interview before. All right, so some of you guys have. So we do that as well. It's a series of questions. You guys have the ability to record a response, re-record if you need to, if there's like a dog barking in the background. But it's a good way for us to just get a snapshot, a more in-depth, determination of your skill set, some of the maybe more specific technical abilities that you guys do have. That might be part of the process. I like to keep interviews less than 3 to avoid interview fatigue. And then you would meet with hiring managers, probably a couple team members. And then if we advance to a final round, we would always like to have you come on site to either our Naperville office or our downtown office, just to see, the office space, and then hopefully an offer letter at that point. So that's most traditionally the way it goes. Good question.
If you get the job.
When would you get a
Like,
response?
how long does it take for you to respond?
So when you apply online, you'll automatically be put into our system. If a hiring manager is interested in engaging you as a candidate, you would either hear from me directly or you would receive an email with that Spark Hire information. Recruitment process can be 3 months. It can also take a little bit longer given the candidate market, if we have a candidate withdraw, if the job spec changes, if interview availability is short or long. So it does vary. We try to keep it, inside 3 months, but it does vary from job to job. Yeah. So all positions that you'll see on our website are ones that we're actively recruiting for now. Again, we try to fill those within 3 months. If you guys are set to graduate in January, December, or May, it doesn't hurt to reach out. It doesn't hurt to apply online. You guys have an incredible advantage because you guys are IIT students, and we've had such a strong partnership. We've recruited so many good associates out of IIT, not just for internships, but for full-time roles. So I always encourage you guys, submit resumes. Feel free to email me directly because you guys are the star athletes that we're always looking for. We want to start these conversations, even if it's a year in advance. Let's, start the dialogue. Let's figure out what you're interested in. If I have the ability to introduce you to hiring managers like Shaheen or data analytics, data science, marketing analytics, I will do whatever I can to get you in front of those folks because there's a lot of brain power in this room. We want the best of the best, and that's you guys. So please feel free to reach out. It's never too early, is the short answer. Any other question? Oh.
What is the day-to-day job of a quant analyst looks like at Calamos? Okay. So what is the day-to-day job? I mean, it varies, right? Yeah. I mean, typically we don't work on many projects at the same time. So at any given time, let's say we are working on 2 to 3. I mean, So for now, I can just use the example that right now. So let's say we are working on a model to calculate the spread of convertible bond. Like, what is the right spread we should be putting on convertible bond? So that's one project. So the person who is working on that, that's his full-time job. That's all he's doing. Aside from, he's also responsible for looking at options during earnings. When companies are reporting earnings, he looks at that and see what the option market is telling about the stock movement, and he makes his recommendation. So he does that, during earnings season. But that's his full-time job. If you're working on, vol regime or vol trading model, that's full-time job. If you're working on VIX, a macro, that's a full-time job. ESG is a full-time job. So I think at any given time, I think each associate is working on a project, which is where he's the lead and he's dedicated and he's spending most of his time. But then there's also a collaboration aspect to it, right? So if Shrey has a question, he can get up and talk to the other associate in the team, right? Now, what I do is I take credit for all their good work and relax in my office. So that's my job. But that's what what we do. And the question on main focus on making models. So yeah, we do make models. How long one model stays effective? Hard to say that. Option decays. Model decays over time, right? So you have to continually innovate. We have innovated. We have retired model in the past, but there is no set time for it. I would say it is based on the performance if the model is not working. And sometimes that is also not true. So for example, value didn't work for the longest time. That doesn't mean that value is a bad model and nobody should look at valuation anymore. It's just that the market regime wasn't supporting valuation. And now this year, value is doing great after 2016. So again, you have to understand if the model is not working because the ingredient in the model has been arbitraged away, or the model is not working because this is not the right time for the model to work. Hopefully I answered the question.
One last question, I think that has been chatted as well. What are the skills you focus on while hiring graduates for quant analyst?
I did answer that.
Perfect. I think with that, we will call it a day. Once again, Shine, thank you very much. Valia and Shrey. Let's give them once again a big hand.